Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the Fear and Greed Index. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, I thought maybe it'd be a good time to talk about the Fear and Greed Index because we actually just saw it drop by quite a bit. If you're unfamiliar with the Fear and Greed Index, it is essentially coming from this website. Link for the website will be in the description below. And you can see that last month we were in greed, last week greed, yesterday neutral, and today we've actually hit the fear level for the first time in quite a while. Now, if you look at the fear and greed index and you look at what really makes it up, it's based on volatility, market momentum and volume, social media, surveys, looks like it's currently paused, Bitcoin dominance, and trends. So when you put it all together, you get something that looks like this. Now, one of the things we've said previously is that a lot of times these rallies that you get often will go to a fear and greed index in the 90s. We saw that happen in 2019 before the market cooled off for a while. I mean, even in 2019, I mean, again, this is the thing. I've often made the comparison to 2019. You guys know that. Deep down, I recognize that it's not 2019, and I know that it's sort of a combination of what we saw in 2019, but what we also saw in 2021. Because while monetary policy is similar to 2019, we hit new all-time highs, similar to to 2021, and so I'd say it's probably a combination of both. Be that as it may, I still can't deny the monetary policy similarities of today compared to 2019. But what we said, in this rally is that oftentimes you will see it go into the 90 to 100 range. And in the 2020, early 2021 rally, you can see it really stayed in that 90 to 100 range for a long time. But in both the 2019 rally and the one we saw earlier this year, it only went up there for 1 or 2 days. Now, what's interesting, if you look when the fear and greed index is just between 80 to 100, it gives you a few more data points. And then if you say, all right, well, and we talked about this in, I believe, the last video we did on the fear and greed index, maybe the last couple of videos we did on the last fear and greed index, we said, well, whenever it goes to 80 to 100, how long does it take to get back to, say, 40 or less? And so if you overlay that onto the chart, you will see that it frequently, when you go into the 80 to 100 range, it doesn't historically take very long to get back into the fear stage. You saw it in 2019. You saw it even in 2021. And you also, this is early 2021, you also saw it in late 2021. You can also see here when it went into the 80s. We went back down below 40 for a little while. So again, it's not that surprising that you find yourself with the fear and greed index at 30 again, because this is what often happens. Again, the market goes from fear to greed and back and forth and back and forth. And sometimes we obviously trend up in bull markets and we climb the wall of worry. Other times, the fear is a little bit more justified and it sort of brings on a bear market for a while. But right now, if you look at the raw value of the fear and greed index, the reason why I made the video is because this is a fairly large drop by the fear and greed index. It was legitimately at 74 only about 6 days ago, and now it's dropped all the way to 30. And so I was like, well, when's the last time it dropped down to 30? In fact, the last time it did so was all the way back over here in September of 2023. So that could be an interesting comparison. I also think, if you look at before that, the last time we were in the 30s, you'd have to go all the way back to really the beginning of 2023. Now, I think the thing to also consider is to look at, is it putting in higher highs still? Is it starting to put in lower highs? It's sort of interesting because if you look locally over here, you'll see we had if you just sort of count this as one, we had a high and then a higher high and then a lower high, We sort of went into this range for a while in Q3, and then in Q4, the market picked back up again. If you look here, you can kind of see something similar, right? Where you put in this high, then you put in a higher high, and then you go to a lower high. Now, the question, of course, is will it repeat what happened last year, or will it do something more similar to 2019? And the difference between 2023 and 2019 is that in 2019, Bitcoin got below the bull market support band, and then it stayed below it for the rest of the year, and then it didn't really get back above it until the following year. Whereas in 2023, we went below it, but then once after the launch of the spot ETFs and everything, we saw Bitcoin get right back above it and go on another rally where it essentially doubled up on the prices, if not even a little bit more. So again, these are important considerations to make. And again, when you look at 2023, it did look similar to some of those phases we had seen in the past as well. But just like we had seen in prior pre-halving years, we had always seen Bitcoin go below the 20-week SMA in Q3 of the pre-halving year. It happened in 2011, 2015, and 2019. So we said, look, it's probably going to happen in 2023. It did, but unlike 2019, it rallied in Q4, whereas this time in 2019, it did not rally in Q4. And then it sort of brings up this whole idea of, is it going to be, is it going to be like a translated peak where you have a left translated peak that occurs a lot earlier in the cycle, whether it occurs in Q4 of this year, whether it already occurred a month before the halving, or whether you just get a normal cycle where a bunch of stuff happens in between and then the peak ends up just being in Q4 of the post-halving year, as it was in 2021, 2017, and in 2013. I think there is still at least some evidence to suggest that the events of historical cycles are playing out. It's just the timing of rate cuts in this cycle is different from when the rate cuts occurred last cycle. So I think for now, what probably makes the most amount of sense is to keep an eye on the Fear and Greed Index, because this is a pretty large drop down to 30. We also got a large drop down to 30 back in September of 2023 as well. And also it was coming off of a lower high. Now, the main difference between this move over here and this one last year is at least this most recent move actually went up to the 90 to 100 range. Now, it might be interesting to overlay going to the 90 to 100 range, and how long does it take you to get to, say, less than 30, right? And in that case, you can see that every time we've gone into that 80 to 100 range, we have gone, less than 30 at some point in the not so distant future from that move. That has not yet happened. Again, with Bitcoin where it is right now, I believe it is off the prior low a little bit right now, and so if it holds that low for the next day or so, you could see that Fear and Greed Index bounce back up. But that's what I think is makes the most sense to watch right now. Is it going to play out like we have seen? We've previously seen this stuff play out, where when you go into the 90s, it's not that long before you go, say, less than 30. And really, even less than 20 is something that could be seen. You can see that going less than 10 did not occur after the first 2021 top. It only occurred after the latter, the second 2021 top that occurred in November rather than April. So, that's where we are right now with the Fear and Greed Index. And, I think, I will certainly keep an eye on it. You can also do interesting things, right? Like apply a moving average to this stuff. You could apply a 30-day EMA if you want, and look at it like that, and try to find some similarities, and even look at like the raw values. It has spent a decent amount of time up in these higher levels over here, right? In between 70 and 80. This is a 30-day EMA, so it's trying to help get rid of some of the noise. And so we'll see. We'll see if this just ends up developing into a lower high and a lower low, or if it ends up, doing something else. You can see over here we had a high, a higher high, and then a lower high, and then it really went down a lot into a lower low. And then it wasn't until we got to Q4 where the market picked back up. And one of the things, if you think about in terms of like summer lulls, right? We talked about the idea of a summer lull where the market just kind of cools down a lot. And again, I don't think it's possible for any of us to know what's going to happen in Q4. But I mean, if you do believe in the idea of sort of just a lull in the summer, which it seems like we are in fact getting, the next question becomes, well, will it pick up in Q4 like it did last year? Or will it be a 2019 style move where even in Q4 it doesn't actually go up? Now, if it doesn't go up in Q4 like it did last year, and if the top, if it's not a left translated, if it's not a far left translated peak before the halving even occurred, then of course it would provide more evidence for a normal cycle. It's just the rate cuts are being, translated a year later this cycle compared to last cycle. Actually, in the last cycle, they occurred in July. The Fed started cutting in July 2019, and next month is going to be July of 2024. But I think that's kind of what we're looking at right now in terms of the cycle. And as well, if you look at things like the ROI after the cycle peak, if you say like peak to peak for Bitcoin, we're currently already, and let's just look at the last couple of cycles or so, the last three, we're already at day 959, right? You can see that the last two cycles didn't really pick up again until about 100 days from now, right? So that would put you, you have the end of July, the end of August, the end of September, right? So it wouldn't really get you, that would get you basically until Q4, right? So what I think right now, my best guess, which again is probably wrong to be completely honest, but my best guess right now is that Bitcoin continues to sort of just chop around for a while. It is through this chopping process that Bitcoin dominance goes up. Yes, I said it. And I know it's down today or this week, and I know everyone's having a field day with it. But just remember, it is still above the bull market support band, and that has held support for quite a long period of time. There've been a couple of fake outs below it, and what I find is anytime it goes below the 8-week SMA, that's when people get more vocal about it, right? When it goes below that 8-week moving average, sort of the views on Bitcoin dominance, or other people's views about Bitcoin dominance having topped, really they get a lot more vocal. But so far, it just continues to hold that bull market support band. So I kind of think it's playing out, how we've discussed. It's just it's a stochastic process, right? You can't rush it, and there's going to be certainly pullbacks in a trend like this. But if you think about like things like ROI after cycle peak, you can see that the last two cycles at this point in the cycle, in terms of ROI from the peak, Bitcoin was still 40% down from the highs at this point in the cycle, right? 40% down from the high. Now again, 40% down from the high, right? If we go take a look at what that would even be, and then we're measuring it not from the high from this year, but the high from 2021, right? 40% down from there puts you at around 41, 42K, which actually happens to be around the yearly open, right? If you look at the yearly open for Bitcoin, it's right around that 41 to 42K level. So look, the thing with Bitcoin at this phase is that we just had a big sell-off below 60K again. Back when we were near the highs, I said we were likely going to go back to the bull market support band, right? Because we were stalling out at the highs. And if it does emulate any form of 2019, you get a high in March, a lower high in April, and then a lower high in May. And then you fall below the 20-week SMA potentially in June, July, August, sometime, going late Q2, early Q3, something like that. And so, at this point, if it were to follow 2019, you had sort of this high, a lower high, and then a lower high. You still had another bounce where we went back above that 8-week moving average at some point. So again, it's not impossible for that stuff to happen again, right? I just think that in terms of where we are in the cycle, if it is a normal cycle where the top occurs, say, Q4 of 2025, then you would expect a cool-off period at the very least, right? Now, if you're in the left translated camp and you're thinking a peak in Q4, right? Then maybe you're on board with the idea of a summer lull, but you think it picks up in Q4. And hey, I'm not here to say it can't happen. It certainly could. But if it doesn't happen in Q4, if we don't really pick back up in Q4, just remember, we are still well ahead of where we were the last two cycles at this point in the cycle, as measured from the peak. And so when you look at things like the fear and greed index, um, and I think it makes sense to kind of continue to go back to say, like, well, what happened last cycle with the fear and greed index right before rate cuts arrived? Rate cuts arrived in July, and you can see that, just before rate cuts arrived, right? So the first rate cut was somewhere over here, and you can see right before rate cuts arrived, Bitcoin, the fear and greed index, we went down to the 30s, we then popped back up, and then it went all the way down into the teens. So I'm just saying, I'm not saying. Know what I'm saying? Right? It's just it's one of those things where it's probably going to be a boring summer, and this bias of lower highs hasn't been broken yet. I think it is possible for us to test the 8-week SMA, of course, at some point, and even maybe to go back above it if 2019 were to reoccur. The only thing that I would say is that if this is 2019 or some version of it, right? If it is 2019 or some version of it, then the next few months should see the Bitcoin dominance reach a top, right? Now, I know a lot of people are going to say, well, it already topped. And maybe they're right. And I will, as much as I feel convinced that it's going to go higher, I always have to respect the idea that, look, I could be wrong about that. It's possible it's already topped. But when I think about, how 2019 unfolded, it did something very, very similar. And in fact, if you're looking at all Bitcoin pairs today and you're thinking, oh, well, they're back at 0.4, what's going on? Remember, they're still below the 8-week SMA, which is at 0.41, and they're still below the bull market support band, which is at 0.43. Furthermore, on the daily time frame for alt Bitcoin pairs, we actually saw a very similar move, and I just talked about this yesterday. In fact, in the video I was like, look, guys, what happened last year. The alt Bitcoin pairs, they went all the way down to 0.35, and then they rallied up to 0.42 before coming back down. They rallied back up essentially to where the breakdown point was. And this is something we've seen happen many, many times. So if you sort of go to where we are today, you can see something very similar has happened, right? All Bitcoin pairs fell off a cliff. They rally back up after falling off that cliff. Very, very similar to what you saw right here, right? To what you saw right over here. And back then, you'll see a very similar wick back up to the upside by alt Bitcoin pairs. It drew a lot of people back in. It made people think that the Bitcoin dominance had topped. But in reality, alt Bitcoin pairs, it was just a wick back up to retest the breakdown point, right? Which, could that be the same thing where it's just a wick back up to retest the breakdown point, and then it just actually continues to go down? And and that's the reason why I think that it's still going to go higher. And as I also said previously, if you look at something like Bitcoin divided by total minus ETH, again, it was putting in new cycle highs as recently as June 18th, right? Just a week ago, it was putting in new cycle highs. You can kind of see that right here, right? It was putting in new cycle highs, and it just continues to sort of climb that wall of worry. And I think it will likely continue to do so until the Bitcoin dominance hits approximately 60%. So those are my views. And I think that the way we tie this in with the fear and greed index, which of course is what this video is about, is to say, look, this is a really big drop. If it's going to play out like last year, you would expect it to bottom here, right? And to only really start to go back up. If it plays out like 2019, you might expect it to get a little bit of a bounce for a few days, but then you would expect it to go to a lower low on the fear and greed index in maybe the next few weeks, right? Could be sometime in July or August, right? And it would probably correspond with, going and spending a little bit more time below the $60,000 range. Because, for the most part, for the last several months, anytime Bitcoin has gone sub 60K, it hasn't really spent a ton of time there, right? If you look at sort of this range, anytime it's gone around these levels, it hasn't really spent a ton of time there. So if we start to spend more time down here, then that would be the way that you see the fear and greed index get a larger drop below 30 level. So that's what I think it makes sense to watch over the next few weeks and months. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and again, check out Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.